All right, so we'll get into the energies first. The oil market, we have been looking at the potential for a bottoming coming in here. The rally that we just got was a little stronger, got a little higher than we had expected that it would, and that's the nature of what looks like a bottoming market right over here. So for those of you that are here for the first time, we're looking at a 10-year weekly and a 2-year daily. We do multiple time frame analysis, cycle analysis, and these are cycle brackets on the bottom. It's a drawing tool, just simply a guide to help us find the repeating rhythms in the market, as you see right in here. And then we show you how they actually are realized up on the top of the chart. So this cycle right over here, were it to be ideal, would move up half the time and then move down half the time. But that isn't what happened, because it was in an uptrend affected by the upward momentum or the upward directional component that we have in here, and that pushed it into a positive cycle. You can see right over here the next cycle peaked and then turned down and broke this support early. This is called a left-hand translation. When you make the peak on the left side of the cycle, it leaves a lot of time to fall, and that's often when you get the biggest declines. And when this alignment here comes into the same time of a corrective alignment in the more dominant weekly, you get some of your biggest declines, as you see. Now, we had a pretty big rebound, getting close up to that 78.6%, and what that tells you is that it's pretty likely we are in a bottoming right now in the energy market, and at least in this oil market. So you can see that this low over here was projected out about 2 weeks from the point where the low was actually seen right over here. It hits these support confluences. The reason these are confluences versus just being support zones is that because of this panicky area where oil went to minus $40, we can only take the lows that we have in here, and we're using these two lows from these 2 weeks as our anchor points, and that gives us these confluence areas, and you can see that it looks like it really hit that one and is getting the support. That being the case, this is a very bullish cycle. What's bullish about it? Well, you only have, even though this moved 3 months sideways, as you can see, and then had the expected decline right over here as it got down close to $35, $35.80 or something, and we talked about it getting to $34, $35. That now you have this, bottoming going on right over here, and then potentially getting this rally in here. So these prices over here would take you up towards the end of the year, November, December, January. This is the resistance right over here, about 43.80. This is at about 45.80. And this one way up over here at that fib extension is about 48.5. I would make that a small likelihood, but again, getting above this level over here, about 43.60, is a very good likelihood based on what we see here. The only question is the low in place, or does it have one more test or decline right in here? When we look at the daily chart, which I will blow up here, you will see that this was a rally that was quite strong. It hits this upper resistance level between the 61.8 and 78.6. When it gets up there, it gives you a signal that the intermediate is bottoming, because the short-term pattern was able to have such a big upside move. You'll note in here momentum turned negative right at this point, and it's been negative and now trying to neutralize while this rally is going on. So if this can, if this turns down sharply, you could test these lows down over here in the second week of October. But the greater likelihood is that, as you can see, we have this drawn an upward configured cycle, which would be bullish, and then another cycle moving up here into the 43s, 44s there. So either way you look at it, the low is due here around the October 7th, 8th, and that would be, in our opinion, the area to consider buying for the next move to the upside. So we're not in a rush. We're not 100% sure the bottom is in place. And if anything, it's likely that this evening star in the sell zone did make this short-term peak. We note that today there was a report of a big draw in inventories in oil, and oil went up and couldn't even hold the rally. So it really does not look quite ready to have any kind of a big upside move. And at the same time, it really looks like we're establishing price as far as where the low is in here. And sometime early October might be the more beneficial time to be buying.